US stocks have just accomplished something that hasn't happened since 1972, and with the 5,000 point milestone being closed above for the very first time, it brings us to some big data points. What happens during the Lunar New Year? What happens after? And more importantly, what does a close of the S&P 500 mean at this point? Today we'll discuss this week's OPEX and the big options that are about to expire. What generally occurs is a rally in with a sell-off afterwards. But could there be still opportunities on the horizon in smaller stocks? Huge imbalances between the Russell and the SPY, and of course other sectors, mean there's a lot of things that we need to discuss. Join us as we cover stocks, commodities, and cryptos today. Well, welcome back everyone to the Daily Show, where we talk about markets around the world, including the macro, lead indicators, and of course the hottest charts. My name's Tom, and we do this every single day of the week. So if you love markets like we do, make sure to subscribe and smash that like button. It was a pretty mixed week, with mostly the leaders continuing to lead, mostly Nvidia, as we all know, and fear and greed hit the extreme greed once again with a big breakout past 5,000. But is it all justified? Well, in some ways, yes. Accelerating growth is happening around the world according to the stats, and we have been seeing this for a little while now, with this earnings season really smashing expectations. 85% of the big tech stocks plus are beating everything that they've been put in line to do, and then some. And that's, of course, also leading into these stats of the PMI being above zero, and this only happening less than a coin flip at the time, but equaling a pretty strong gain of 7.37% on average. If we also go over to some other interesting stats before we get into the big parts of today's video, I thought you might be interested in the Friday performance since October's low. You can see here that there's an average percentage that's pretty strong with Friday, and we have reported this once before. If this changes, that's when you might want to start being a little bit more aware, because of course this week is big options expiration. We'll go through that later on today. Let's talk about 5 largest stocks. Are they rip-offs? Have we seen a bubble, which other people are talking about right now? And are we in one at this point? Well, arguably you could say yes, but it's nowhere near as bad as March 2000. 43 times multiples for the stocks that were in the top 5 back then versus 27 right now. And you can see the metrics overall are not as bad as they once were. Where some concerns lie, though, is the forward 12-month PE. And you'd notice if you've been watching this channel for a while, this is not one of my favorite investment kind of levels. Now, I am a big fan of buying in at the low 17s, mid 16s, 15s, those types of things. Huge fan. I've been doing it for years. It's one of those kind of areas that I feel like is much better in this current market, where we have the Fed really controlling everything. It seems like whenever we get into that kind of 15, 16.5 ratio, something happens, something breaks, the Fed comes in and supports the day. We're in a broken system, so that's often what does happen. But we're starting to trade back above 20, which is getting us elevated. Doesn't mean markets have to sell straight away, but it is there. Here's an interesting sentiment report, though, that's a bit better than that greed one from before. It's the Bank of America Bull Bear Indicator, and you can see it's reading as latest 6.8. Now, when this gets into the extreme bearish or extreme kind of bullish zones, you need to be paying attention. And you can see here that extreme bearish was hit last year in October, and we brought this up on the channel, and it ended up leading into, of course, this big rally that we've got going on right now. Now, if we are to extend higher since we broke through 5,000, this read will be important, and we'll be looking for, of course, an extreme bull at some point in the horizon if we continue to break up. What are some other signs that are showing us we're a bit extended? This is a retail survey, and you can see here that 49% of us think that markets are looking damn good, 28% convinced, no idea whatsoever, and 22.6% are bears. So really, the bears are getting down near historical lows. This is way under the average of 31%, and it shows you that volatility could come on the horizon. Now, where could that volatility be? Well, if you know anything about your percentages in February, you would know that this week matters. Generally, we see a little bit of a run up, but then on options expiration day, we often see a bit of a sell-off. So that's actually going to be this Friday. Remember the stat before, we had generally a very positive week of Fridays. All of a sudden, though, options expiration on this particular month, on this particular date, we usually see selling. Then the next week, we often get weakness across the board with more of a coin flip percentage, and sometimes even a sell-off that then starts into March, which tends to happen in especially election years where you have a sitting presidential or sitting president running for, of course, the race. Let's go over here to what's going on with the markets. And of course, you can see here the stocks above the 5 SMA or, of course, above the 20 or even above the 50 are looking a bit weird. The 5's looking good, the 20's looking okay, and the 50's actually dropping off. And what that's telling us is the market's making new higher highs, but it's doing so on very little breadth. And if you put up a RSP indicator on your TradingView chart or anything else that you use in platforms, you'll notice the equal weight is still really hovering around, telling you that maybe it's time to see the other markets start to catch up. If the Russell starts to break out, which it already looks quite strong on charts, that could be the opportunity, and we'll talk about that later on. Let's now discuss what's going on with the S&P 500. Obviously, CTAs are very important because we've seen when they turn down, markets are often at their peaks. We haven't got that yet, and I'm here to report, and I've posted both one on X, so if you want to go follow FX Evolution, links in the description down below, both the S&P 500 and, of course, the Nasdaq. You can see the S&P made a new high. We're starting to get closer on here to the really high extension that we had in July of 23, which obviously marked a sell-off level. Now, we haven't seen any selling in CTAs. They're still pushing up. You can see here the Nasdaq one. But just remember, we'll update you here on the channel when that occurs. We'll also be updating you when we start to see any kind of vol ratio starting to move up. So, of course, you might be familiar with the VIX being partially broken or maybe even completely broken since zero-day expiration options. But there are some ways of starting to blend different volatility indicators. And, of course, we'll be bringing those to you throughout the rest of this year. What happens when we hit a milestone? So far, this has not occurred. We've obviously gone to 5,020-ish, and we haven't seen really any selling. Now, the 4,000 launch went up, got close, then we saw selling, then we rallied through and pushed super hard. But we still saw a sell. 3,000, we saw a small pullback. 2,000, we saw a small pullback. But generally, if these pullbacks do occur, which they have every other time, then they're usually short-lived. So remember, if we do get that February into March pullback, the stats are still on the bullish horizon side, especially if you're an investor, swing trader, those types of things will be interesting. We know that 5,000 is close, but of course now it's been hit. But what this means is that we tend to lead into some very positive 6-month returns. It can be a bit more all over the place when we first reach these big 1,000 increments. Sometimes we push through, and as we said, we go on kind of like little sell-offs or little sideways action markets. But in general, 100% track record when we reach these levels. And of course, we have just done so. So remember, over 6 months, it's pretty strong. So what else do we have? Well, of course, for the bulls, they're going to be happy about Chinese New Year because it's a horned animal. This is this is one of the funniest stats I've ever seen. So it turns out the goats are the best year, ox is second best, then dog, pig, rabbit, tiger, monkey, then dragon. So dragon is not actually, I would think dragon should be up here, Game of Thrones and everything. We need to be up here. But it turns out dragons aren't the strongest, and poor snakes down here and roosters do not get a good market time. So you might want to pay attention to the next time we see a snake and a rooster. Overall, though, it is a positive stat for, of course, the Chinese New Year into the end of the year based on the fact that it's the year of the dragon. What about the Fed? Now, I'm just bringing this up again just to show you this huge discrepancy between what the central banks are doing and saying and, of course, what the general experts out there are claiming in terms of basis point cuts. Some think only a few basis point cuts. Some think a lot. Some are hopium, I think. And the markets themselves are really moving in this idea that, everything's going to be great and we're going to get tons of cuts. What happens when they don't get them, though? This could be something on the horizon. Again, earnings season every single time is going to make a lot of difference because if we see earnings not stack up, that will mean compression of forward PEs and PEs in general, and you're going to see some big sell-offs. So this season, there's no doubt it's absolutely smashing it. It's like 80% winners. Like that is something you don't often see every day. Let's now talk about big options expiration because, of course, we know it's all coming. And you can see based on this chart which expiration days matter. And I think you'd be pretty aware that, of course, we do have some massive options expirations coming up very, very soon. So this week will matter due to what's going on in options, and we'll have to be paying attention. Now let's talk about the underdog, one of the not emerging market, but one of the major global players that's been beaten down for a long time. We just saw one of the best days since November of 2022 on Chinese stocks. And this was a big deal because when you see thrusts like this, it often can mark bottomings of markets. Just to give you some interesting stats here, I thought this was a big one. The market cap of Nvidia, Apple, Microsoft, and Meta together is bigger than the entire market cap of the Chinese stock market. There are some AI companies there as well. It's just unbelievable to think how big these major stocks have come. So are days into the Chinese New Year pretty good? Well, historically, it actually tends to be a pretty good trade session over the next coming weeks with a bullish lean to it, especially on the Shanghai Composite, where you see usually a bit of a grind higher. Now, if you know anything about the charts right now, and we will look at them later on, they have been heavily sold. But China's going back to the playbook it's used before. Chinese stocks tend to do better after replacing their main regulator. We've just seen that occur. We've obviously seen all sorts of movement across defending that zone. And really the only thing we haven't seen yet is a huge amount of stimulus into the economy, which I expect to be needed at some point. And again, this year could be very interesting on that market. So we discussed the idea of the Russell 2000 versus the S&P 500. The reason we're doing that is we haven't really seen a discount this large for a long time. In fact, the last period we ever got this wide was back in the 2000s. So there could be opportunity on the horizon for smaller caps, and in particular, if the economy continues to expand the way it's been doing, this will be a market sector that I'd say would do quite well. What about earnings this week? Well, it's for the Russell, really. Small caps in particular are here, and some of our favorites and some of your favorites are coming through with big options moves. And of course, we've got Shop, we've got Datadog. We also have things like Robinhood, which has a very interesting base on it. Can they actually break out and start moving? And then we've got some of the ones from 2001, things like Twilio, Roku, etc., and Coinbase. That'll be an interesting one, especially since we've had the Bitcoin ETFs announced. These are the expected moves. Don't get it wrong. There are some huge ones, and options markets don't really lie here. The expectation is for a between 13 and 14% move on both Shop, Twilio, and Roku. So if you're a dangerous player, that one could be interesting just because there's huge amounts of opportunity, but remember the risks are severe. Now, what just happened on Friday? Well, we broke through the 5,000 level, really starting to make out that we could be pushing 550 and 5,100. That's the next major call resistance. This is a pretty big zone for markets, arguably one of the most important. And with a closure on the weekly above, it generally suggests with such a strong one that there might be a little bit more to come in this rally yet before we see any kind of pullback. So we've got to be very careful here on these markets as they continue to rally. And as we've always mentioned, the price action just keeps driving higher with almost no sell levels. If you are going to predict and therefore try to place sells, you're going to need to do so with options to protect yourself from potential liquidation and stop loss hunts. Let's now talk about the big 5K level. So the 5K was broken when we got through 50-10, 50-20, 50-30 became very, very likely. If we break 50-30 next week, probably going to 50-50, 50-50, I reckon 50-100 from that point. So there's some strong levels. We'll update you through the options as we get them. There weren't too many big transactions that were worthwhile reporting on, but as usual, treasuries finding in some big trades around that 93, 94 that were reported several times. Yields, though, becoming increasingly important as we move forward. If they break up, the dollar index keeps breaking out, these things will eventually drive on the market, you would have to think. It's like in plain sight, but the market hasn't cared yet about them. Huge moves on Nvidia, 721 if you can believe it, on the Friday session, up 3.6%. We also saw one of my favorite stocks in terms of the hypergrowths doing very well, which was Cloudflare, an interesting company, and 47 million almost in total options value, which was a huge percent on the call side, 61% calls and 29% retail traders. There was a ton of unusual activity, so you can pause it here if you want to have a look. But where was it all centered? Well, interestingly, we started to see some of the old December put breakouts starting to break out again. We had TAN, solar, clean energy, obviously semis were there, and even regional banks started to recover. Defensives were down through the session. And this takes us to a 5-day roll here where you can see some pretty big moves. Solar and clean energy are starting to break out. In fact, they're really on the best returns, whereas the defensives, which marked before 5,000 being the most important level, have really dropped off. Now, if you know anything about markets, The big thing is here was you usually want to see defensives have a 5 to 10 day rotation into them. Then if markets drop off and show you bad price action, it's a massive warning sign. We haven't seen it yet. We just had a little bit of rotation just below the 5,000. Obviously, someone was turning defensive, and then earnings just is too much for this market right now. Central bank activity, both worldwide and US, have been flatlining, so nothing to report there. We've got yields moving through here and not breaking out of the 4.2 or 4.5, but do watch the US 10-year and 2-year, because if the 2-year breaks through 4.5, which I've got an alert here for, I think this could be a very decent move. And what's going to happen is I would say we'd spike into this supply, and that could be, of course, a driving force for markets down. So yields are starting to really turn here. And remember, a huge part of why these markets were up initially was anticipation. Now it's because they're seeing strong growth. So, of course, Wall Street's excited because specifically the Mag 6 have done so well in earnings. Imagine if NVIDIA didn't do well. Ooh, would be bad. One to watch moving forward. Could that be the catalyst? Treasuries over here, 93.94, so pretty good, strong zone for it. And one of our favorite indicators for market strength or weakness broke out last week and kind of, I guess you would say, gave us a prediction that markets might be driving higher. Home builders continuing to strengthen. And the more this strengthens, obviously, the stronger the generalized market is. These are usually a fairly good sign of a robust economy in terms of at least the economy strengthening or weakening. And at this stage, the price action doesn't lie. It's trying to go up. What about the US dollar? The US dollar is holding firm. And you can see here the weekly close did close underneath and actually closed as a rejection. So this is going to be a very important week. Have your alerts above here. This is going to be a pretty big momentum play if we do manage to get above it. For anyone that's not able to see the screen, 105.50 is the zone for the US dollar index futures. And you can see that's closed in our supply area. So there's still a chance that weakness is here. And if the yields don't break out, of course, you're unlikely to see the dollar go very, very strong. But this is, a very important level for it. And we'll be looking to see whether we get that rally through. Because if it goes high, especially with the news that's coming, then that's going to be a big, big drain on the markets. What about gold? Very hard to read. Straight in the middle of the zone. 2020 notoriously been bought before. And obviously 2058 to 60 has been sold a few times. It's just in the middle of those levels. Oil is much more interesting though. We had a breakout to the upside suggesting that yields were going to go up, which they have a little bit. And of course, we have a heavily traded zone with a little spike up. Now, I've got an alert here, and this alert is sitting at around 75.90. Now, if markets manage to get underneath that level this week, it could be very interesting for day traders. They might be looking at kind of getting involved with the overall trend, which has been generally down, and trying to look for shorts within that range. Now, of course, if it breaches to a new high, oil's really telling you that it's moving up. And we'll be updating you on CTAs this week for this as well. But you can see here the structure, and the market has been structuring up to kind of show that at the moment it's strong, but if it starts to weaken, there could be something more there. So certainly a very interesting traders market. Tesla, not a bad weekly close, not quite above the long leg doji of the previous week, and not quite above that 196 breakout, 195 breakout, but good sign. Obviously, credit sellers, I think, would be pretty happy with that. Burning time while it's in the sideways. Remember, even if the market just sits there and does nothing, there is profit to be made in these markets from those particular locations. What about semiconductors? They are so ridiculously strong. They are just going up and up and up. And it's why I generally don't go against semis, because they're one of my favorite investment plays. They have been for a long, long time. But at the same time, there was potentially a double top that never eventuated. There was obviously the island reversal, which was reversed against. And this market has actually gone over the top of the technical take profit at this point. Now, there are some things you could be looking at, such as fib retracement levels. And of course, I'd put it on the wrong side. So this is in terms of extensions. And you can see here that we've just hit a 1618 extension, which is often considered a big level off the last move. So it'd be interesting to see how semis trade in. Let's now move over to some of the big stocks that will be, I think, making stories this week. And one of them has to be Hood. Now, the reason why Hood's so big is you can see the base here has been sitting for a long time. Now, this is notoriously the story of American IPOs. Usually you come back to them around 18 months after they've IPO'd, and it's been a bit longer than that now. and you start to look at whether they're based off. Now, Hood has been sitting for a very, very long time. You can see it's got that base. Now, it has broken an interesting weekly above these 2 wicks. So is this trying to predict a decent earnings? I would say it's trying to. Will it get it? Who knows? But I expect it to be a very volatile event. And of course, the options market does as well. So an interesting one there to do some analysis on. Let's talk about Airbnb, another one that's interesting. It's trying to rally up here. Obviously, a 155 breakout would be big, going to 175 and possibly on. If it does weaken, 131 on the low end could be where we see the markets open up after the earnings. Then we've got solar. Now, solar has been absolutely downtrodden. It's been beaten down for a long time, and it's trying to break back up. Now, Enphase has been doing okay, and that's actually had some good technicals on it that I've talked about in our Market Masters Club. Links in the description down below if you're interested. But you can see here that you've got a solar potential breakout on TAN, which is the ETF. So if you have a look at Enphase, which is generally considered the pretty much one of the strongest, you would say, solar stocks, you can see here it had an okay earnings. Well, okay, just kind of beat expectations, which were very bad, and it started to rally back up. So again, if these things break, if we see TAN breaking out, clean energy, etc., those are sectors that could be very interesting on the charts. CQQQ, or Chinese stocks in general, have obviously been incredibly weak. We've talked about the HSI. We've got our key zone for this already broken down, which is 16,500. We're trading underneath that, and the weekly close wasn't exactly favorable. But a breach out of here will also close above the weekly 20, which many of you know would be mean reversion closed above. That's significant. It would break trend lines. It would do so many things that would show you that there could be a lot of recovery. With that thrust and everything else that's going on, it'd be a big deal. Aussie market looks pretty good for the Australian traders out there. Obviously, a nice kind of resurgence here. Expect this one to open up through the session on Monday. And then we move over to the biggest stocks, which is, of course, the US. Now, the Russell 2K had a really good recovery. We mentioned on our Friday video that basically we saw what looked like a bit of strength. Now, this is where the bears were going to sit if they were going to sit anywhere. They clearly lost this particular fight, and this was a good bull zone. So the bull zone seems to be kind of continuing here. If you go to the weekly, you'll notice the weekly closure was above, well, at least above the wicks of the long leg doji and above previous periods. Now, if you have a look here, this market is super below the others. So we know that we've already tapped this supply once, twice, 3 times, and 4 times. So at this stage, if we do keep seeing the Russell kind of move through, it could be a driving force for the rest of the markets, pushing up to the 220 if we keep seeing bullish stuff. Overall, this is a very important level, of course, but yeah, the Russell is looking better. CQQQ, or Qs in general, is rallying up, so there's nothing you can hate from there. When you get a closure on the highs, usually that means there's a little bit more to come, even if a seller does come through, and there's no signs yet of slowdown. Even the structure isn't giving us anything. So if you look at something like the US 100, unless you get underneath this zone here of like 17,100 zone, you're not really seeing any significant swing turn. And we really haven't seen much. This was the last little swing turn that we got, and that was only on the Nasdaq, not on the S&P at that point. And it, of course, tried to sell and then breached up above. And once that happened, the squeeze was going to occur. There's been very little weakness on this market, almost hitting 18,000, another big round for that market. Then we move over to the US 500. Now, it hit 50.30, which makes sense. But now that we're through 5,000, this is kind of a fairly strong closure. And, of course, the overall weekly is just ridiculous. When you think about it, this is actually a history being made. We have not seen is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 of the last 15 candles up. That's a very bullish run. No sell down on the 5,000 level. As we mentioned last week, the only way we were going to see sellers is if we actually managed to get underneath 49.85. We didn't do it. We just kept sitting around it. We found buyers. We pushed through. We came down to the 5K, which is a huge options level, and then it rallied back up. So at the moment, the trend is still up. We have no turn points yet in this market. We will keep looking. And obviously, we don't even have weakness coming through in many of our indicators, including bonds, including what we're seeing on everything to do with home builders and transportations. And even this one, the American consumer, has improved in recent days, which is, of course, XLY versus XLP. We didn't see a proper weekly close or any kind of close under the 20. Now, if that had happened, all these things were pointing into weakness. So at this point, we still have strength in the market until proven otherwise by, obviously, the price action itself. Let's move over to one that did break out, and this one actually gave a very good thrust indication, which was Bitcoin. Once we broke through 43.8-ish zone, I always felt that 46 to 47 was super possible. It happened very quickly, typical Bitcoin. And at this point, it's actually showing, especially if the weekly closes around the price it is right now, that 50K might be on the horizon. And what I've done is I've put in an alert level at the next zone, which I think is about 50.9. So at this point, Bitcoin is actually moving very strongly. For anyone that's a Bitcoin maximalist or really likes Bitcoin, remember that Bitcoin ETF, although it's sold and was buy the rumor, sell the fact, it is a big deal, especially for alternative asset placement. We'll talk more about that in the future, but that is a big deal. And of course, it has moved through. Lots of opportunity in tons of commodities this week, small stocks as per usual, guys. And do remember, huge news. So we have core CPI coming out Tuesday, February the 13th. This is going to be, what's going on with inflation, higher for longer or not. Could be a massive catalyst for markets. Then we've got core retail sales as well to show you whether the American consumer is really any good, retail sales in general. And then we have PPI. So on top of huge amounts of small caps that really need to start getting along because RSP is so far behind, we also have a whole massive amount of economic news. Make sure to stay tuned to the channel, subscribe, smash that like button if you enjoyed the video. Have a great weekend. And of course, I hope everybody's watching the Super Bowl and you're ready to see who wins. Which one have you got? Let us know in the comments down below. Bye for now, guys.